today with Laura. So without further ado, Laura.
Great. Well, thank you, Denise, for having me. Thank you to Product That Counts. I can only sort of imagine what it was to have this when I was starting my career in product management, and you had to just figure it out all by yourself. So I think that's wonderful that Product That Counts is doing this. And Denise, thank you for hosting me. So I'm going to talk today about what I call surviving scale-up. And scale-up is, in my mind, the most exciting time in the lifespan of a company, but it is challenging. So before we get into the details, I'll tell you a little bit more about me. Denise was very generous in her introduction. As she mentioned, I'm from Colombia, but I've been in the Bay Area for many, many years. I started my career over 25 years ago, and I've had experience in large and small organizations across a whole range of industries, from large enterprise SaaS, early days of speech recognition, legal technology, HR tech, more recently at TrueML in fintech that, as Denise mentioned, is a wonderful company really focusing on reinventing this very complex period for people, that's debt collection. Currently, I'm an interim CPO at another wonderful mission-driven company called Plastic Bank that is trying to eliminate plastic from going into the oceans. And it has a blockchain platform that traces all of this recyclable plastic to ensure that it is collected in an ethical and socially responsible way, so that companies that want to advance their ESG objectives can really rely on them. But one of the reasons I wanted to share a little bit why that I've been in so many industries is that as much as each company that I've been in is unique in some way, a lot of the things that I've learned through my career are things that translate from one company to another. And that's why I'm hoping that this session will be helpful to you, even if you're in a different space than any of the ones that I've worked in, because I think that there is something about growing companies and some of those growing pains that are the same no matter what industry you are in. Finally, just a little bit more about me, one little piece of personal information. I'm a home winemaker. This is a hobby it started as a hobby with my father-in-law, who was a doctor at Stanford, and it became really something that we've been doing for over 30 years. So every year we go, we pick up grapes, we make the wine. And interestingly, I think that there are a lot of parallels between the art and science of making wine and the art and science of product management. So with that, let's start talking about scale-up. And so what is scale-up? Most companies go through 3 different stages: an early stage, a scale-up stage that I call the teenage stage, and you'll figure out why, and then an adult stage. Now, during the early stage, the startup is still searching for product market fit and for a repeatable business model. It is moving very fast, trying different things, potentially pivoting, because they still are trying to figure out what's going to resonate in the market. And it really is an organization that's sort of a temporary organization where everybody is doing whatever it takes to get that product out to the market and to secure those initial critical early adopters. In the adult stage are mature startups. They may already have gotten through a liquidity event, maybe an IPO, maybe we're part of a large M&A. And these are companies that are growing through more repeatable processes. These are more stable organizations that are executing against a proven business model. And then there's this in-between stage. And that's why I call it this sort of teenage stage, where the company is no longer searching for product market fit or a business model, but rather is trying to really build the company and to scale. And scaling is a completely different ball game than the early stage. And the reality is, according to Crunchbase, around 60% of those startups that sort of survive that early stage die during this scale-up stage. And while it may be it may be easy to think that business progression is linear, the reality is that it is not. And some of those strategies that might have helped the company in the early stage actually become an obstacle when the companies get to this scale-up stage. So let's look again at what are the strategies that successful startups use during that early stage. And again, they move fast and iterate. They really are focusing on testing things very quickly to see what fits. They are not worried about scalability. They have a team that really is willing to do whatever it takes. And that means that you have a lot of people wearing multiple hats. Communication is informal, which allows for a lot of agility, but everybody's still aligned and clear as to what are the priorities. And while most of the knowledge may be in some of those early employees that know everything about the product or the business, it may be the founder, it may be the initial engineers, because the team is small, that tribal knowledge is easily communicated. When I was the product manager for speaker verification at Nuance, I could go and sit next to the VP of research and development and just pick his brain to understand the technology and the product. But what happens is that when the company grows beyond whatever 100, 150 people, that type of informal communication, that type of quick moving fast and iterating starts breaking. And what you have is a lot of chaos. So what do those companies, those startups need to do so that they can really start transitioning to a more mature company? And there are 5 key transitions that companies need to go through. And while I'm going to focus primarily on the last 3, because they're the ones that impact product the most, I want you all to think that product touches everything in a company. And therefore, product leaders and product people actually need to be involved in every single one of these transitions. And so the first one is moving from people to process. Now, process can be a bad word in some startups because it immediately makes people think, oh, we're going to become slow, we're not going to be able to move fast. But the reality, again, is that in those startups, you typically have this core group of people who know everything. They are the go-to people. They may be the engineers who are the only ones who understand deep inside the code to fix things. Maybe it is in one of my companies, the CEO was the only person who actually could articulate the great value proposition of the company. So the sales team kept pulling her into all of the sales calls. But what happens is as the company starts growing, that core team cannot scale. And if they cannot scale, they become a bottleneck for the company to grow. So what needs to happen is that that tribal knowledge that those people have now needs to be embedded in the processes of the company. And what that means is embedding this expertise into the structure of the company by documenting things. This goes all the way from documenting HR processes to documenting the code. It has to be reflected in training. Now there has to be a better training and onboarding process for new people. As the company scales and you start really hiring quickly, it is really important to have processes to be able to train and onboard people so that they can be productive faster. And the other thing is role specialization. As companies get through the scale up, there are going to be new roles showing up that didn't exist before because the complexity increases and this idea of having one person wear multiple hats doesn't work anymore. So you may see things like sales operations, or if you're lucky, product operations, which is really great to start to pop up in the organization. The other thing you need to do is create a formal cadence of communication. This informal communication where people sort of knew what was going on is going to break down. And so what that means from the perspective of the executive team, probably you're going to have more of all hands where you're communicating to the company, where the business is, what is going on. But from the product perspective, now it's really important to start having a way to communicate the roadmap, or at minimum the priorities of the product. You would be surprised at how many companies that I joined, and they were not tiny startups, had no roadmap when I came in. And yeah, the product team and engineering, they sort of knew what they were working on, but nobody else really had clarity. And the problem with that is that, especially in B2B, if your sales team doesn't really know where the product is going, they will come up with their own version of it. So it's really important to start now having some more formality as to how you communicate to the company what product is focusing on, what will be delivered, and what not, so that they don't have the right expectations. And finally, and this may seem not very intuitive, but it is really important for companies to start planning to institute culture. Culture in a startup typically is something that starts with the founders, but it's very naive to believe that you can expand that culture that initially was transmitted just organically to a company that's growing into hundreds and even thousands of employees. So the culture and the values of the company now need to really get embedded in the processes of the company as well, in the way you do recruiting, in the way you do hiring, in the way you do performance evaluations. So that was the first transition. The second transition is moving from relationships to brands. Especially in B2B, it's very typical the initial customers come through personal relationships that the CEO had, or that the VCs made an introduction. But as the company starts growing, it's really important that now there be a brand that the market recognizes to really attract those new customers. And this is the time when starting to build out a marketing and sales team becomes important. If you are in B2B, you're going to need demand generation and branding. If you're in B2C, you want to have marketing people that can start really doing social media marketing, for example. On the sales side, it is the time where companies start really building out their sales strategy. They may need to be building out their sales team, and sales enablement and product marketing become really, really important, because a sales team cannot be successful if they are not empowered with the right communication, the right value proposition. And one thing that's really important, and I see that it's kind of changed in the last years, but product managers are part of really clarifying value proposition and pricing and packaging, working very closely with product marketing. So it's really important to be involved in helping the sales team with that. Now, the third transition, and this is one, of course, where we as product leaders are really responsible for, is moving from early product to scalable product. And notice that I'm not talking about moving from MVP to scalable product, because startups that are really starting to scale are way past the MVP stage. They now have a product that has proven product market fit, and now they really need to scale that success. So to understand what are the key challenges that companies face from the product perspective in this stage, let's go back one more time to the strategies that were used in the early stage. Again, it was all about moving fast and iterating, which meant that there was no attention paid to scalability. Because again, the product could even have to pivot. So the focus was experiment as fast as you can, don't worry about scalability. The other piece, it's all about features. You want to get features that are visible to your target customers as quickly as possible to show value. So there's no time or effort in things that are tools in the back for configurability or APIs or so on. And finally, it's absolutely critical to secure those early adopters. And if you're in B2B, and especially if you're in enterprise B2B, those early adopters are absolutely crucial. They will help you better define the product, and they will be the references that your sales team can point to. So you, in this early stage, as a product leader, need to be really willing to accommodate what those early adopters need to in order to secure them. But if you've been doing this, and if you were to imagine your product as a building, at the end of this early stage, what your product might look like would be something like this. It would have a bunch of functionality that's customer specific. Again, you needed to secure those early adopters. They are critical. So you would have been willing to accommodate things that you probably knew were not going to be interesting for the rest of the market, but that were very critical for those customers. You will have pieces of the product that are really shabbily constructed. These are all the shortcuts and hacks that the engineering team was probably even encouraged to do in order to get something fast out. Your foundation will probably not be very stable. And again, the focus was not on building a scalable architecture. It was on building something fast so that you could get it out to the market. But now you have a foundation that's really not going to allow you to grow. And that's what we typically think of as technical debt. There's another piece, and it's a component of your building that seems to be in continuous construction and is never ended. And this is the work that engineering has to do every time a new customer needs to be onboarded, because they have not built the APIs or the tools that would enable a services team or a tech support team to take on that work. And I also consider that part of technical debt, even though it's really lack of APIs and low configurability. So why is it that these problems that existed in the early stage now become pretty problematic in that scale-up stage? So let's look first at the problem of having customer-specific functionality. Again, early on, you as a product leader or product manager probably were willing to take on building stuff that was not great for the whole market, because what your highest priority was to secure some of those early customers, and they are very important. However, if that continues, once you start having hundreds and thousands of customers, and your early customers are accustomed to dictating what they want, what will happen is that they will take over the roadmap. They will start treating you like a custom development shop, and they will start demanding more things that are important to them. And you may, if you continue to accommodate them, you may miss what the market really needs. And so what you need to do is to start saying no, but that's never easy. So a couple of tips to help you when you have to push back on those big, important customers. One of the things that is valuable is start communicating proactively your roadmap. For some of those customers, they probably envision your roadmap as a blank sheet of paper for them to fill in. If you start proactively going to them and sharing the areas that you're focusing on and what you're seeing in the market, at a minimum, they will realize that you're actually kind of building a product, and they maybe more reduce their demands. The second thing that worked really well for me when I was at Intapp, and Intapp is a company that when I was there, we were focused on the top 1,000 law firms in the US, UK, Canada, and Australia. And as you can imagine, each one of those law firms felt that they were the most important customer that we had, and that we absolutely needed to deliver whatever it was that they wanted. So one strategy we used, we started bringing together some of those key customers in customer councils. We would group some of them that looked at each other as peers. And we would share with them the direction we were going. We would share with them what we're seeing in the market. We would ask them to share with us what the biggest challenges were that they were facing. And what was great was we would see a customer that had been pounding their fist saying, I absolutely need you to do this, realize that none of their peers cared about it. So that was very helpful. The other thing was very helpful was those customer councils made them realize that we were not building custom software for any one of them. We were building a product for all of them for the whole market. So that was very, very helpful. But then sometimes the only alternative is to say no. And that can be really difficult, especially if you have a very powerful customer. So how do you prepare to say no? The first thing that you need to do is make sure that you align with your CEO, because you can be sure that that customer is going to call your CEO if you say no and they're not happy. And to align with your CEO, you need to be able to show to them the trade-offs that the company would need to make in order to accommodate those unique requirements that they have. I had one case where we were going to have to push back on one of our really, really big customers. And we had aligned and we had said, okay, we're going to have a call with the customer. And we were all aligned, we're going to push back. And we got into the meeting and the CEO decided to join last minute. She was not going to be part of the meeting that we had planned. And in the middle of the meeting, she promises to do whatever they wanted. And of course, we knew we couldn't. So I actually had to go back to the CEO later, sit down with her and explain to her why we couldn't. And she had to go back and sort of take back her word and apologize to the customer. So you don't want to get to that point, but definitely you do need to get alignment so that you're able to push back. And in some cases, you need to be willing to lose a customer. And I've had that experience too, having to align with the executive team to part ways with a customer that wants to push you in a custom direction. So the second piece is technical debt. Again, technical debt has existed even in the early stage, but it can become really, really problematic when you start scaling. And every startup should have some technical debt as they end this early stage. Because if the startup in the early stage had focused a lot on building tools, making everything scalable, they probably would have run out of money before they had found product market fit. So it's totally natural that there be technical debt. The problem is that when you get to the scale-up stage, you need to start addressing it. Because if you don't address it, what's going to happen is that it's really going to start causing you pain. And in the most benevolent way, technical debt will start slowing you down. It's much harder for an engineering team to build additional functionality on top of pieces that are poorly built, that are very fragile. But in a more pernicious way, technical debt starts being visible to your customers. At Intab, at one point, we had rushed to get a new product out because we had a competitor in the market. So we had built the product to have parity with the competitor and then had added functionality to really make it attractive to our big law firms. And we were successful. We started displacing this competitor in our big customers with this new product. But at one point, that product included a search component for conflicts. And at one point, some of those large customers started having major issues with performance of that search component. And they started talking to each other and essentially saying the product is not ready for prime time. And it pretty much froze our sales pipeline. So we actually had to stop any new feature development and just focus on improving performance, which we were fortunate that we were able to do and unfreeze the pipeline and appease all the customers. But you really want to start looking at things early on before they become visible. So what are the strategies to deal with technical debt? I call it, first of all, facing reality. Sometimes in the early stage, most of the bandwidth from engineering can go to building new functionality. But as the company scales, as you start adding functionality, as you start adding customers, the reality is that the time that engineering can spend in new functionality changes. Because now you're going to have to be maintaining a lot more of the functionality that you've released. You need to start addressing technical debt before it becomes a real problem. You are going to be dealing with more escalations because you have more customers. And you better start working on APIs and implementation tools so that your engineering team does not have to do it themselves. If you don't plan for that, what's going to happen is that the reality will push you in that direction. When I joined Topia, another one of the companies that I worked for, and they had a very complex platform for helping relocate employees. When I joined, I knew that the previous VP of product had been let go, and I never met him, but he had great experience. So when I came in, I was trying to understand what had been the issue. And I started hearing repeatedly from the executive team that product and engineering kept promising things and never delivered. And when I started working with the team, I realized that their capacity planning was based on the idea that they were still operating in this early stage world. And they were assuming that 90% of their bandwidth was going to be able to go to new features. So they were promising all this new functionality. But the reality is that the company was signing in big new customers. And every time a new customer was signed in, engineering was pulled into doing some of the integration and implementation. They had been delivering new functionality, and no feature is done in version 1. So the customers that were starting to use that new functionality were coming back with feedback and with issues. So that lack of aligning to where they really were was what was causing this disconnect with the rest of the company and promising things that they couldn't deliver. So how do you deal with that? The recommendation that I have is, first of all, partner with engineering to really understand where are the areas that have the biggest risk from a technical perspective. Now, engineering may likely tell you, oh, we want 6 months uninterrupted to just re-architect everything and do it right. You as a product person know that's not possible. But if you partner with engineering to really understand, let's say if we were to double, triple our volume, our transactions in the next month or more than that, what would break first? Then you can start making space in the roadmap for that work to happen. And it has to be prioritized as part of the roadmap because you only have one engineering team. So you need to also set the expectation with sales, with the executive team, that no, you're not going to be delivering a whole bunch of new customer visible functionality because you're going to be focusing on this. And you need to explain why it's important. The engineering teams are not great at explaining business value of some of those things. But paying for technical debt is very valuable because the risk is your team, you're going to start missing SLAs with customers. You're going to start seeing customer attrition because they are starting to see things that are not working. So those are the things that sales will understand. And you can really make sure that they see the value in that. And that proactive communication, again, is very important because expectations need to be aligned with what the sales team is going to get, what engineering is going to focus on. So the next transition, moving from ownership to partnership. In many companies in the early stage, the company is going to do everything. They need to ensure that they secure those initial customers, so they will do everything. But as you grow, there's an opportunity to leverage partnerships to be more effective. And partnerships come in different ways, different flavors. One is market access partners, partners that help you sell or resell your product. There are partners on the services side. If your product is a complex product that needs configuration and integration, it's really great to have services partners outside of the company that can do that. But that means your product needs to provide the APIs and the tools to enable those partners. And finally, there's technology partners. And here's where product really, really needs to drive. Because as you're evolving your product, you're going to have to make some decisions of what functionality build versus what functionality to partner with. And you really should look at your engineering organization as a precious commodity that should be focused on the things that are core differentiators for your product and not on rebuilding stuff that is available in the market. So a good example, and I've done that in multiple of my companies, is embedding BI tools. Typically, when you have a product that has reporting, and if you have large customers, they will start asking for more and more, and they want to slice and dice the data in different ways. And at some point, if your engineering team needs to build all that capability, it's going to take away from them building the core product. So at that point, you may look at embedding a BI tool that would enable your customers to still slice and dice data the way they want without distracting your team. And that also gives you the opportunity to do integrations, to expand sort of the capability of your product without building everything. We did a lot of that with Lever because we realized that in the recruiting space, there are all these new things coming up that we were not going to try to build, but we could integrate to them so that the value of our talent acquisition platform would increase by having all these partner integrations. And yeah, now the final, and this is a very important transition that also is led primarily by product, is moving from being opportunistic to being strategic. This actually has two components that sort of look contradictory. One is focus, and is expansion. And in the early stage, because the company is trying different things to see what stick, is not unusual to have companies that have a bunch of sort of initiatives going on and maybe one customer that is using one piece of the product or one separate product. But once you find product market fit for one of your product or one specific use case of your product, you really want to scale that and grow that. And that may mean that you need to stop things that are distracting to your team so that you really focus on getting that scale for the product that has proven product market fit. So that's on the focus side. But on the growing side, typically a startup will not get to the size that the founders and the VCs expect based on one single product. Your first product may be sort of what gets things going, but typically to get to the size that company wants, you will need to be delivering an entire product suite or a platform, or you need to be expanding beyond your initial market. And this is where starting to think, while you're still executing, focused on kind of where you have product market fit, you really need to start defining what is going to be your expansion strategy. And there are different strategies, right? You see companies like Salesforce, they became a platform, incredibly successful that way. You may decide that you're expanding from the one product you had a whole suite of products that serve the same customer base. You may expand to other industries. At Intapp, when I started, we had 3 niche products that we sold into law firms. And because we were well received in those law firms, what we started doing is building additional products, and we ended up building an entire product suite that we could sell into those same law firms. So we more than quadrupled the number of products that we had in the 4 years I was there. And we were being able to expand, land and expand inside those law firms. But then we also realized that being just in the legal industry was going to be limiting. So we started expanding into adjacent industries. We identified industries like accounting and management consulting that had some of the same challenges in terms of client confidentiality issues, client selection issues. So we started looking at which other industries had similar problems and started expanding into those industries. So again, this is something that you really need to start thinking of early on. Some companies expand going from, maybe they started in the mid-market and start going into enterprise. That's a big jump, and it's maybe even harder for companies in enterprise to go down the mid-market, and it does need a lot of planning, but it is another expansion strategy. And of course, international expansion is another one. And you can't try to do all of them all at the same time. So this is an area where, as a product leader or as part of the product organization, you really want to start thinking, where are we going to go next? How are we going to expand? So that kind of, for the recap, there's all of this various transitions. The main thing that I want to remind you is even if you're not the product leader, even if you're just the product manager, product touches everything. And as a product person, you want to be aware of all of these areas, even if you're not directly involved in any of those transitions. So my final recommendation is just be prepared. If you're starting this scale-up stage, just be prepared, be proactive, don't let things surprise you, and enjoy the ride. It's a really, really fun stage for a company.
Laura, I love that. That roller coaster, I feel like absolutely encompasses the scale up stage, the highs, the lows, all of it.
It is fun.
It absolutely is. It absolutely is. So for those of you that have joined us live today, please post any questions that you might have into the Q&A section, and then I'll begin moderating those. But in the meantime, I'm going to get Laura started because we want to take advantage of this precious time to learn from her. So Laura, you talked about, scaled products. And oftentimes I think that when people think scaling, they think, oh, I'm going to lose innovation. I'm going to lose agility, right? Those things are going to go to the wayside. So can you talk about, in your experience, how do you maintain that startup innovation, spirit and culture and agility while still, balancing and going through this scale up stage?
Yeah, I think that, as you say, it's a balance. I do think that is a misconception to think that you can scale and not bring some processes in, because actually what that's going to do is really slow you down. When the size of the organization gets to a certain point, when the number of customers get to a certain point, if you wanted to continue operating the way you were as a startup, what you're going to do is really slow down everything. So process is a friend if you don't overdo it. And so I think that that is the thing. You need to start identifying the areas where actually things are slowing down because of the chaos.
Mm.
To then start saying what processes will help avoid this chaos. And if you are in a regulated industry, it's painful and there are going to be more processes, but there's a good reason why there are processes in a regulated industry. But you still may influence how intrusive or how those processes can be more effective. Like at TrueML, we were, again, in the area of fintech that probably has the most regulation, because debt collection has been subject to a lot of abuses. So rightfully so, there's a lot of regulation. And we had to be absolutely compliant. But we were looking for ways to make a process that the communication with the legal team and the product team could be as agile as possible, so that we could still be moving things. And because it was a B2B2C, we definitely wanted to be able to experiment and try things that engage the consumers. And we had a team that was running experiments. But because we had to make sure that everything we did was compliant, we had to check. And so we started establishing, like, what are the things that actually need to be run through legal? What are the things that don't? If we do need to run things through legal, can we have an SLA with them so that they know that they have to respond to us? So you do need to find that balance. And as I said, the trick is start identifying which ones are the areas where you're slowing down because there's no process, and tackle those first.
Yeah, I like that. You're sort of creating these swim lanes, right, where you can go really fast, creating other swim lanes where you need to check the boxes, and then looking for those swim lanes where there's complete chaos to try to bring some order to the madness.
Right.
I love that. I love that. So, maybe thinking about the people side of the equation, when you think about some, scaling challenges there, what are some of the best practices for really building and leading high performing product teams through this transition? And maybe one related question is, are the same characteristics that you might, use in identifying good product people for an early stage startup, some of the same characteristics that you'd look for at a later stage?
Yeah, so it's interesting because I think that good product people, you want them always and in every stage. There are some people who really, really thrive in the very early stage. And some of them actually grow nicely into the scale-up stage. Some of them choose to know the company is too big, and it's less about sort of the role, it's just the feeling in the company. They used to know every single person, now they feel it's too big, and that's normal. I think that there are people who may feel better in a much smaller organization than a larger one. Having said that, I think that for a product person to go through that being part of early stage and going through scale up is an incredible experience and an incredible learning experience. And in terms of building the product, the main thing is that as the company starts scaling, as the products start scaling, the complexity of the product also grows. And you do need to start bringing more people. You can't have the one person who started, the product manager for the initial product, now start taking on everything, and as you start adding functionality. So in my mind, a key thing is to really plan on how the product is going to grow so that you can start aligning your product and engineering teams with that. When I was at Lever, for example, and when I first joined, both the product and engineering teams were relatively junior, and the engineering was like, for every initiative, they were mixed up and assigned to an initiative. And we said, no, this isn't going to scale. So what we did is we laid out like where we were planning to really invest in the product. There were whole areas that we wanted to invest in for new functionality, for new capabilities that we didn't have people on them yet. But we started mapping which one were the areas and how it would make sense to organize product and engineering aligned to those areas. And that's very helpful because then you're starting to grow the team, but you have a plan for what people are going to, and then you start looking at the right people. Like I had to, we really wanted to build our API. Well, I had to find a product manager who really was good at that, who was very technical versus some of the other areas.
Yeah, that makes a ton of sense. It also makes me think of just even building your leadership bench.
Yes.
Right. And so how do you think about, and what's the right timing to bring in more seasoned product leaders? Are there certain kind of signals that you're looking for organizationally through the scale up stage?
Yes. And I think that this is really important. Because sometimes the focus is so much on getting somebody who will get the work done, right? And so just get this product manager who can dive directly, and you need those people. But if you just focus on that, what you're going to find is that as a product leader, you're going to be pulled in so many directions that you're not going to be effective supporting your team. So starting to think, again, as you start thinking of your organization, you need to start thinking how you're going to bring that next level of management. And it's really important. Again, when I joined Lever, the CEO already knew that she wanted me to come in and build a leadership team under me, which was great. What I did is I first kind of spent time evaluating where we were with the team, figuring out how I felt the organization should grow. And then I started bringing the next layer. And it was so important because once I brought in that next layer, then I could really start contributing more to that. How are we going to expand? What is the strategic thing? If you don't bring that layer as a product leader, you'll never be able to step back and do more of the strategic work.
Yeah, I think oftentimes, they always say hire somebody better than yourself, right? And it's like, if they can work you out of that job.
Absolutely.
Right, then you've got time for the deep thinking. I love that. So maybe shifting gears a little bit, talk to me a little bit about the roadmap. So what are tools or methodologies or frameworks that have really been proven to be effective for you and your teams as you think about how do we manage and prioritize the roadmap during this scaling process?
Yeah, and I would say less about the roadmap itself, but more about the product strategy and product alignment. As the companies grow, the product gets more complex. There's more stakeholders. And if you're in a complex industry, there are a lot of stakeholders. And so the question of how are you going to prioritize? I'm a big believer that the best way to prioritize is with the combination of tops down, bottoms up. And from the top, there has to be at the executive level an idea of what are the key objectives, whether the company uses OKRs or some other method. There's a vision. The company has a vision and a mission, and product has to keep that in mind always. But then the company also has objectives probably for the next year, business objectives that are very important. And I see the responsibility of product to align the product strategy and product roadmap so that it continues to support the vision while still supporting the more shorter midterm business goals. And so the way it works is the executive team provides kind of visibility of what are the most important objectives. Then the product teams that are the ones who understand bring up from all the initiatives that they could be focusing on, which ones are the ones that will best map to delivering on those business objectives. And so that's where you have kind of the tops down and the bottoms up. And that will drive what the roadmap should be. And it will also make it a lot easier than to communicate with the rest of the company, because you can then map saying we're focusing on this because it maps to this company objective.
Yeah, I think the great part about that too is also it creates that opportunity to get your product people really a part of that strategy and make sure they feel like they've got their fingerprints on it too.
Yes, and the product team needs to understand what are the business objectives too. So once they understand, then they can go and say, okay, we could focus on this. Like if a key business objective is to reduce attrition or to increase net retention, you may choose initiatives that are quite different than if your retention is great, but you want to increase sales, right? And there are going to be things that you would do to prevent attrition if existing customers are unhappy that probably won't help sales because they won't be visible. But those are the example of things where product can say, okay, this is where we're going to focus. And they will understand what is the business goal that they're going after.
No, that's great. Let me switch gears maybe yet again, because you touched a lot on strategy there. And so I think there is a lot to talk about in terms of strategy. That could probably be a session in and of itself. I loved your side on this combination of like focus and also expansion. So maybe as we first start to think about the focus side, and especially I think in this, year of efficiency, as it's been coined by many, how do you know when I should divest from a product? And sort of maybe cut my losses to bring a lot of that focus.
Yeah, and I think that especially this last year and year and a half really has brought this to focus to a lot of executive teams and a lot of product leaders. Because when you're in this high growth stage, it's okay to have a lot of bets, right? And so you're kind of growing your main product, but you know that you want to do something else for your vision. So you may start incubating some other things. But when the economics change and all of a sudden the effort is how fast can you get to profitability? How can you extend your runway? That's a very different animal. So that's where you need to start saying, okay, there are certain things that are reasonable from the perspective of the long-term vision. But given the shorter term business goals and potentially given the need for survival from the company, what are the things that you may need to put on hold? Hopefully you can pick them up later. And it's a very hard thing because you're going to have teams, product teams, engineering teams who might have been really pushing that. And if they are the younger products, even more excitement. So it's a really tough decision. And it's a decision that needs to go with a lot of explaining why, right? Stepping back and painting the bigger picture of why the company needs to make that tough decision. But yeah, I mean, it goes back to you need to be aligning both that long-term vision and those shorter-term business and financial goals. And sometimes that shorter-term business and financial goals forces you to stop things that are great longer term, at least temporarily.
Yeah. I always think about it as like sowing seeds, right? And pouring water. Some are going to grow into plants. I normally say you have to pick some weeds, but I like what you're throwing in there too, which is, hey, it's not no, it may just be not right now.
Because you're trading resources. So in one of my companies, we actually had to do that. We had a product that was the main product, but we had a much broader vision for the company. So we were incubating this younger product. It already had some revenue, but it was small revenue. And we were very excited about it because it aligned very nicely with the broader vision of the company. But when the economy started changing, we knew that we didn't have any short-term path to profitability on that product. That was going to take a long time. And meanwhile, we really needed to focus on getting profitable with the other product. So that meant we said we're going to have to move those resources to the other product and kind of put this on hold. And it was painful, but it was kind of absolutely the right thing to do at that point.
Yeah. And I think people can rally around those decisions, like you said, if you share the why. So maybe flipping gears to that expansion side, you talked about examples of, entering into new geographies. You might, take a product and kind of find adjacent products. Could be different product, same buyer, could be, different products, different buyers, lots of different options there. So I guess as you think about that long-term growth, what are some of the insights or what's your sort of decision-making process to say, hey, we should expand to new buyers, or we should, expand our portfolio to new products, or we should look at new geographies? Can you share any quick insights? I know that's not an easy one to do.
Well, I mean, and I don't know if you know Shelley Perry. She is fabulous. She was an operating partner at Insight Partners, and she helped a lot of companies through that scale up. And one of the things she says, and I totally agree, is the biggest mistake that companies make is try to do several of those moves at the same time. That is a recipe for failure, because whatever you choose to do, it will require a lot of investment, and it will require aligning the company. And when you say, oh, we could do this, and let's try this a little bit, but then let's also try this, what you're doing is this peanut buttering, and you're probably going to fail with all of them. So which one to choose really will depend a bit on the company and understanding the market and understanding what may be easier or more difficult. And I mean, as I shared in the case of Intap, really our path was expanding the product suite within the same target customers, and then expanding to another industry. And we didn't do both at the same time. I mean, once we had a pretty strong product suite, we started saying, well, which of these products? And then we started saying, okay, what, and maybe acquisition for getting into those industries. But it wasn't like both at the same time. I remember when I was with Nuance in the early days of speech recognition, and the company had started expanding quickly internationally, because from the technology perspective, guess what? The engineering team was able to now support German and French and so on. But we sold primarily the technology for use in enterprises that were automating customer service. And what we found was that having French and having good quality speech recognition in French was not enough. It turns out in France, probably more so than other countries, companies want a salesperson to be French, to be in France, the professional services team that's up to be there. So this idea that you are a US customer, a US company, and you're selling, that didn't work out. And so what happened was the company had been kind of investing in they had a couple of salespeople in France and in Europe, but it wasn't working. So the company had to sort of retrench and say, we can't go internationally to sell all those countries at the same time, because it's too much investment. It's not. So I think that that's where you need to start really balancing which strategy is going to be the best. The platform strategy, of course, is an ideal strategy. It's not as easy to become a platform. Like everybody wants, like, oh, I want to be a platform. Well, that you really need to become a platform by attracting a lot of partners, a lot of people. But it is a great strategy.
Yeah, I love that though. I mean, your example is so great. And it goes back to the thing that you've really been saying throughout this session. Product touches everything, right? And so it's easy to make a decision, hey, we're going to expand to this geography, and not think about all the implications on the support side, on the go-to-market side. And so you cannot make those decisions in a vacuum.
Absolutely.
Well, Laura, your insights are incredible. This session was amazing. I'm sure it will be well played on the Products That Count site. And so I know there's been some requests for your slides, and so this will certainly be posted there. So you'll have visibility to watch this over and over again and gain, all these incredible insights from Laura on repeat. But I just want to thank you so much for spending your time with us today.
Well, thank you for giving me the chance. And again, thank you for hosting this, and thank you to Products That Count. For young product managers, you have no idea how valuable a resource like this is. When I started my career, there's like no place where you could find any information. So this is really fabulous.
It is great. And they can buckle up and ride that roller coaster through this scale up. I love it. Thanks again. And thank you all for joining us today.
Thank you.